Hi, I'm Esther Friedberg Karp, and today we're going to dive into advanced accounting with QuickBooks Online and learn how to navigate unusual and specific advanced accounting needs. And now a little about me. I have a QuickBooks consulting practice based in Toronto, but I have clients all over the world. I'm advanced certified in QuickBooks Online and Desktop, and I hold certifications in 3 countries, the US, Canada, and the UK. I'm also a member of the Trainer Writer Network, the TWN, and I've also created courses for Intuit Global. I've also been fortunate enough to be named to Insightful Accountant's Top 100 Pro Advisor list for the last 7 years. I'm honored to be presenting this session to you at QuickBooks Connect. So how can QuickBooks Online handle all these special and unusual cases? QBO, QuickBooks Online, is the accounting equivalent of a Swiss Army knife or Batman's utility belt. Just because there isn't a clickable button for an unusual function doesn't mean that you can't actually record it in QBO. There are workarounds, and that's what we'll cover today. And you don't necessarily have to find a third-party app to handle it either. QuickBooks Online is very flexible and robust, so think outside the clickable features. Our agenda for this session is to cover batch invoicing, inventory valuation adjustments, fully landed costs, barter, customer deposits, and tracking gift cards and gift certificates. Let's dive in. First up, we'll cover batch invoicing. I'm going to go into product. Sometimes the automatic invoicing feature doesn't suit all businesses. Let's go into Gear, Icon, Account and Settings, and choose Advanced. In the automation area, there is a place to turn on automatically invoice unbilled activity, but I'm just not crazy about this. It doesn't work for me. I like to invoice throughout the month. And also I like to review my invoices before they go out. So this just doesn't work for me. I'm going to cancel out of this. Instead, what I can do is click on Sales, All Sales in the left navigation bar. And then in the money bar, I can click on the dark blue unbilled activity color block. Here I can sort things by date or by customer. I can do that. And I can choose which customers and for which items I want to invoice. And then I can hit Batch Actions, Create Invoices. And it creates those invoices as of today's date, which happens to be October the 7th. Now what I can do is go into the sales area, but this time click on Invoices, and I can sort them by date or whatever other column header parameter I want. And I will just go backwards in time to October the 7th. Here they are. There's a few of them that I created earlier as well. So what I can do is I can check them off and send them out, or if I want, I can review one at a time and see if I like it and make any changes that are necessary. But let's assume that all the invoices that I want to send out on the 7th are just fine. Let's say I've reviewed them. There they are. And then what I can do is I can click on Batch Actions and hit Send. And they're out the door, just like that. Didn't mean to do that. Okay. Next up, we're going to cover inventory valuation adjustments. Go back into product. Let's say I run an inventory valuation summary report dated whatever date. And I see that I have 1,575 widgets in stock, and that happens to be correct. However, they've gone sorely out of style, or maybe they've been damaged, and they're worth far less than the $1,057.50 that I paid for them over the course of several purchases. Maybe they're VHS tapes or 5 1/4 floppies or something like that. They're obsolete. So the first thing I need to do to track obsolescence, to do the inventory valuation adjustment, I need to create an account, actually two accounts. I want to create a cost of goods sold account called obsolescence. The detail type I've chosen is supplies and materials. The other account I need to make, the other account I need to create is a clearing account. It's a bank type of account. You can choose whatever detail you want, and you'll know you've done things properly, most likely, if your balance in the clearing account is 0. Okay, the third thing I need to do is to create an inventory quantity adjustment. So let's do that. Let's create an inventory quantity adjustment. We have an inventory quantity adjustment in QuickBooks Online. We don't have an inventory valuation adjustment. So we're going to start with the inventory quantity adjustment, but we're going to put it, instead of inventory shrinkage, we're going to put it to the obsolescence account. And we're going to pretend like we're getting rid of all of our widgets. So then instead of 1575, we have 0 left. Let's hit save. And if I look at the transaction journal behind the scenes, I see that the inventory account has been reduced by $1,057.50 and the obsolescence cost of goods sold account has been debited by $1,057.50. Why is there more than one set of lines? Because the inventory was purchased over 2 FIFO layers, and that's why it's showing up in 2 sets of lines. So we've hit the obsolescence account for $1,057.50, but we've actually gone too far, because we only wanted to write down the value, not write it off completely. So we actually still have those 1,575 widgets in stock, but we have to buy them back at a reduced value, say 10 cents a piece. And this fake purchase is taking place the same day as the inventory quantity adjustment. So let's create an expense. It's going to be a $0 transaction. So we're going to use the clearing account. We don't want to use an actual bank account that gets reconciled, because if somebody's reconciling a checking account, let's say, and they see a $0 transaction, they will be tempted to delete it, and that will just mess everything up. So what we're going to do is we're going to buy back those widgets. And this time, those 1575, we're getting at 10 cents a piece. And the obsolescence account, this was worth $157.50. We're going to put in $157.50, but negative, so that we have a $0 total for this expense. The payee is blank. We just make sure that the payment date is the same day as the inventory quantity adjustment. Let's hit save and close. Now, if I look at my inventory valuation summary for October the 7th, I've got my 1575 widgets, but now they're only worth $157.50. And if I run a profit and loss for the one day, let's take a look at that. The obsolescence is $900, because that was the $1,057.50 that we wrote it off completely, and then we reduced the obsolescence by $157.50. So the net is $900 in obsolescence for that day. Now there is one other thing I might do, and that's edit the widget inventory item and lower its default selling price. That has nothing to do with the obsolescence and the reporting of it, but you may want to lower the price, because the default price should go down because these are obsolete. Next, we've got fully landed costs. Along the same lines as an inventory valuation adjustment, we can use a similar methodology to track fully landed costs. There are times when the purchase cost of an inventory item doesn't fully reflect the costs that went into getting that item ready for sale. we need to capture all the post-purchase costs related to this item and roll those costs into the asset value. And yes, we can do that probably with some third-party apps, but that might be overkill if you only need to do it once in a while. So for this purpose, we need two accounts. Let's go back to the chart of accounts. One is landed cost clearing. It's an other current asset type of account, which will have a balance of 0 if we've done all our work. And right now it's at 50,000. I'll show you why. The other is the clearing account that we used earlier that has so many uses. So that bank type of account. So let's say we're in the used car business. Let's go to our vendors. And let's say on October the 1st, we buy an old beaten up Aston Martin for $10,000 from the car auction, and we pay it by check, fine, out of the checking account, whatever. And this is where we set up the Aston Martin inventory item. And if we had several Aston Martins, they'd all be separate inventory items because they're all different from each other because they all have a distinct vehicle identification number, a VIN. So we bought this inventory item for $10,000 on October the 1st. And I'll do it here. If I run an inventory valuation summary for October the 1st, we see that the Aston Martin is worth 10K. Very good. Now let's go back and see what happened after we purchased it. On October the 3rd, we went to Car Guys and we spent $50,000 on our Visa account to fix the car and detail it. We're categorizing this expense item not to an expense, but to that landed cost clearing other current asset account. This is parking it temporarily. Now we're going to do something similar to what we did before with the inventory valuation adjustment. Let's do an inventory quantity adjustment, same day as the Aston Martin got fixed. And we're going to put that to landed cost clearing instead of obsolescence or shrinkage. And let's pretend we're just getting rid of the Aston Martin temporarily. And we're making it 0. And now we're going to buy it back at that higher price. So let's expense it. And we don't need a payee. It's October the 7th from the clearing account. It's going to be a $0 expense again. There's the Aston Martin. And this time it's worth 60,000. And to make this a $0 transaction, we put minus 60,000 for the landed cost clearing. And so now it's a $0 transaction, and we hit save and close. So if we run the inventory valuation summary again, but this time as of October the 7th, it's now worth 60,000. So that takes care of landed costs. Next, we're going to cover barter. Now we know that in QuickBooks, you can't have the same name populate the customers list and the vendors list. And that's an issue. If you have an outside party who both buys from you and from whom you buy, they're both a customer and a vendor. So here we have Esther's Easter eggs, which is a customer, and we've put a C after it. And on the vendor list, we've got Esther's Easter eggs as well. And we've got a V after it. And we've got payables and receivables for both these items, for both these names. Okay, let's run some reports. Let's run an unpaid bills detail. Start again. Let's run an unpaid bills report. And here we see that Esther's Easter eggs is owed $800. And let's run an open invoices report. And we see that Esther's Easter eggs owes us $1,000. By the way, I have turned off automatically apply credits, which is a setting I'm not that thrilled with anyway. In the automation area of advanced, I never turn this on because I like to be in control of how credits are applied. Okay, so we've got vendor Esther, we owe $800 to, and customer Esther owes us $1,000. So it makes sense to zero them both out by the lower of the two amounts, the $800. And we'll do this using a journal entry. We'll take accounts payable and we'll reduce it or debit it by $800. And we have to put a name here. So we're going to use Esther's Easter eggs, the vendor. And we will take accounts receivable and we will reduce it or credit it the same $800. And we'll use Esther's Easter eggs, the customer. Let's hit save and close. The open invoices report shows that Esther owes us a net amount of $200. And on the unpaid bills, we owe her nothing. Now, we see the positive and negative $800, and you can get rid of them and have them apply against each other just by doing a pay bills and choosing Esther's Easter eggs and letting QuickBooks apply the credit. And for the receivable, what you can do is when she pays you the $200, just do receive payment, choose Esther's Easter eggs. I should have chosen an easier name. And let's say she's paying you the $200 net. There we go. It's $200 against the invoice, and the rest is being taken care of by applying the credit. So that's it for barter. Next up, we have customer deposits. If you have a company that accepts large customer deposits up front, or maybe they're called prepayments or retainers, whatever money they're paying up front against future invoices, it's possible to track that money by doing a receive payment against no invoice for that customer. But then your accounts receivable report could be skewed severely with a large negative number if it's a lot of money. If the business model is one in which the deposit monies are held for a long time, or it's a significant amount of money, or if there's lots of transactions having to do with deposits, you would have a majorly skewed balance sheet and accounts receivable report. So instead, in cases like these, it's best to track deposits made by customers ahead of time as a balance sheet account. In this case, an other current liability. We've created something called customer deposits. I've given it an account type of other current liabilities, and I've chosen a detail type of trust accounts, although I could have chosen something else. I just feel that it is money that you're holding in trust for your customers because it's unearned revenue. It's deferred revenue. You haven't earned it yet. And also, we will create a product service item called customer deposit. It's a service item, and it is mapped to the other current liabilities account, and it's non-taxable. Let's see how we can use that. I've created an estimate for Spock for the deck of the enterprise sub-customer, pardon me. and he's accepted it. It's for all this stuff, and I've turned on progress invoicing. He's accepted it. And I told him, listen, Spock, I need a chunk of money, of deposit money up front because I need to pay for materials and labor. So I'm asking for $50,000 up front. And I book it as a sales receipt. It's money going into the checking account or undeposited funds. And I'm putting it against customer deposit for $50,000. I hit save and close. Now we know that Spock has $50,000 of customer deposits money outstanding with us. So let's use it up. Let's pretend I'm going to invoice him. The first invoice, 25% for each line. Let's hit create invoice. I'm dating it October the 7th. And what I do is I will put the customer deposit at the end, and I'll put in a minus 50,000 to use it up. Now I could use up the 50,000 on several invoices, 10,000 here, 25,000 there, and so on, and use it up in bits and pieces. But for the purposes of this illustration, I will do all 50,000 used up in one fell swoop. Okay, I've added the customer deposit line, and what I want to put here in the description is less customer deposit, so it makes sense. And I hit save and close. But I knew that he had 50,000. I had 50,000 of his money. I knew that we had 50,000 of Spock's money in deposit. But we need to know this for other invoices, how much in customer deposits we have outstanding, so that we can put a negative line at the end of other invoices. And for that, we need a report. So let's go into the chart of accounts again and find the customer deposits. And let's run a report and choose all dates. And I'm going to group it by customer. I can further customize this to get rid of some columns I don't need. I don't need a balance column, cleared column, memo description, or the name because it's grouped by name. I think that's good enough. I can also put here customer deposits, something like that, customer deposits outstanding, something like that. And notice that I've got $0 for Spock because we've got the 50,000 from the giving of the deposit from the sales receipt and 50,000 of it being used up. Now you can imagine that over time, the length of this report would grow and grow and grow with a bunch of $0 subtotals that would make it very hard to read. So there's one more thing I got to do. I'm going to customize this further. I will filter it for a cleared status of uncleared. And you'll see why in a minute. Normally, I would save the customization of this report, but I've already created this report and saved it in my custom reports. Okay, so now we got to get rid of this 50,000 and 50,000. And to do that, what I'm going to do is I'm going to reconcile the customer deposits account. We always put in a zero balance, regardless of what the balance sheet says, and we can reconcile it as often as we want. Let's hit start reconciling. I can sort this by payee so that all of Spock's stuff is together. I have a 50,000 and a minus 50,000. If we had used it up in dribs and drabs, I would see 10,000 and another line for 15,000, and I would check them all off only if we could use up the entire 50K. All right, so my difference is 0. I can hit finish now. Let's go back to the customer deposits outstanding. Remember, I've filtered it for a cleared status of uncleared. Let's reload this. Okay, the 50,000 fell off. Because of the filter of uncleared and the fact that I cleared the 2 transactions that were for Spock, it's now much cleaner, which is what we want. Spock's deposit funds were fully used up. We reconcile them. They fell off the report. As an FYI, if you're running a set of books using multiple currencies, you can create foreign customer deposit liability accounts as well, denominated in any foreign currency that you want. I do that in my own set of books because I get paid deposit funds up front from foreign customers. All right. Lastly, we have tracking gift cards and certificates. This is similar in concept to the customer deposits workflow, but with a twist. Let's assume that we have this construction company and it has a retail counter and it's taken to selling gift cards to improve their cash flow. They also sell paint and bricks and drywall and stuff like that. How will we account for these gift cards that were sold? Gift cards are not sales revenue. In fact, we can view the sale of gift cards as deposits paid up front by customers. This makes the sale of gift cards deferred or unearned revenue. Let's go back into the chart of accounts. And we're going to find gift cards in circulation that I've set up. This account, it's an other current liabilities account. And again, I call it a trust account. You could choose one of the other detail types. This is so that we could know at any time the dollar value of what we owe to our customers at large. Now, in the products and services, I've created 3 non-inventory items for gift cards. I'll open up the $25 one, and I've given it a selling price that matches the denomination in the name. And the so-called income account is really the other current liabilities account, gift cards in circulation. And I did similar things with the $50 gift card and the $100 gift card. Now, let's say that every day we're using a $0 sales receipt in QuickBooks to summarize the Z out report from the cash register or the end of day report from the point of sale system. If you don't know about $0 sales receipts to track daily sales summaries, I suggest you look them up in the QuickBooks knowledge base article 186350, or you can look for record your total daily sales in QuickBooks Online. Okay. So let's run that report again. And let's say that on October the 1st, all we sold were some bricks, and they were taxable, so there's some sales tax there. They also sold some gift cards in different denominations, and the amount that they got paid was just by checks. Now, I could have set up other payment methods such as Visa, MasterCard, cash. I could have done that, but for simplicity's sake, I'm only using one negative line to track the money that came in that got collected. The transaction journal behind the scenes indicates that there's no revenue accounts involved for the gift cards. For the bricks, yes. For the gift cards, no. This is just adding money or crediting the gift cards in circulation liability account. I can also add a quantity column so we can see exactly what was sold. And if I run a balance sheet, for October the 1st, I see that the gift cards in circulation outstanding is worth $725. I can also run a different report, sales by product service summary for October the 1st only. And I can filter it just for the gift cards. And I can call this net sales of gift cards. Now, let's go back to our products and services. Now, let's go and see what happens when the gift cards get redeemed. On October the 7th, we can see that some bricks, drywall, and lumber were sold. And yes, there was some sales tax down here in the footer. Some checks were received, but also some gift cards were actually redeemed. So we have negative numbers for the gift cards that are on this sales receipt. I can do the transaction journal thing again. I can customize it and add a column for the quantity so I can see what's been redeemed. The same net sales of gift cards report for October the 7th will show negative numbers because the net effect for that day was that cards were redeemed, none were sold. If I run the same report for the 7-day period, I can see the net sales of gift cards. I've got left over 2 of each for a total of $350. And if you think about it, that makes sense because 725 were sold on October the 1st, and then 375 were redeemed on October the 7th. So 725 minus 375 equals 350. If I want to see what's outstanding for each denomination over all time, what I can do is I can run a sales by product service summary report for all dates. And I can customize it again for just the gift cards. And this tells me what I have floating out there in circulation from all gift cards over all time. And this would also match the balance sheet for all dates. And I would just have to change this to gift cards in circulation and run the report, and I would save the customization. But actually, I've already created all these reports and saved them. So our key takeaways from today are, even if there's no button for a particular function in QuickBooks Online, you can probably do it with a workaround. You can do batch invoicing, inventory valuation adjustments, fully landed costs, barter, customer deposits, and tracking gift cards and certificates. These are just a few examples. If we had the time, I'd go over foreign currency deposits as well, which are much easier to track in QuickBooks Online than they are in QuickBooks Desktop. Thank you so much for watching.